in Q3. We expect the SDA demand to remain modest for Q4 as well, since the availability of chips still continues to be a challenge. The expected improved availability of chips is being forecasted from April or May, which will bring back the stronger demands of SDA. Since most of our customers run their production on campaign basis, you may at times see an oscillating demand of SDA, like we saw during the Q2FY22. Therefore, company performance should be evaluated on yearly basis rather than on quarter basis. We have seen a strong growth potential. We have seen a strong export growth as well. Exports have contributed nearly 80% of the revenue on 9-month basis. With a continuing good forecast for exports, we are confident that Tatva's export revenue for FY22 will exceed the full year revenue, total revenue of FY21. During Q3 FY22, the revenues from electrolyte salts for supercapacitors has seen a jump to 2.1% of total revenue. The overall demand for electrolyte salts are seen on the rise, with applications of supercapacitors seeing commercialization. We are observing a slow but steady rise in demand for electrolyte salts. During the quarter, we appointed Mr. Ashok Bothra as Chief Financial Officer and key managerial personnel of the company with effect from 3rd December. He is a chartered accountant with 24 years of experience across finance functions. We welcome him heartily. In anticipation of COVID-19 lockdowns and disruptions in supply chain from China due to Chinese New Year and upcoming Beijing Olympics, Winter Olympics, we made conscious decision to stock up on inventory so as not to hamper our production and ensure smooth supply to our esteemed customers. We are thankful to our key customers who have quite quickly absorbed the increasing cost of freight and RM in certain cases, which has ensured that we could operate with decent margins during the quarter. The capacity expansion of setting up additional facilities at our Dahej SEZ site and expanding our R&D capabilities at Baroda from the IPO proceeds is on schedule. During the quarter, we have received formal approval for our SDAs from 2 large customers. Slow commercialization with these customers will begin in 2022. It has taken 3 years and 5 years to get formal product approvals from these customers. As you all are aware that this is quite a entry barrier area. On new product development front, we have successfully submitted commercial sample of a good potential agrochemical intermediate with very stringent quality requirements. We should see commercialization happening in next 12 to 18 months. On continuous flow chemistry, we have concluded our R&D trials for the specialty solvent, and designing of the pilot equipment is currently under final review. We expect to start the pilots run in coming months. Also, we have a good breakthrough in synthesizing a versatile catalyst, which has successfully synthesized 3 different products on continuous flow chemistry. We are now optimizing the process parameters to conclude the R&D and enter into the piloting stage. In terms of demand outlook, I would say that Indian specialty chemical industry is passing through the most exciting and most encouraging phase. There might be some speed breakers like chip shortages or temporary supply chain disruptions, but on a broad basis, we are highly optimistic about the growth potential. During the quarter, we have purchased a new industrial plot measuring about 5 lakh square feet in the Dahej industrial area. This will help us meet our growth 3 to 4 years down the line, by which time we anticipate to saturate our capacities at our existing plant locations. With this, I conclude my remarks, and now I would like to hand over the call to our CFO, Mr. Ashok Bothra, to take us through the financials.
Thank you, sir. Good afternoon, everyone. I would like to briefly touch upon the key financial performance for the 9 months ended December 2021 and quarter ended December 2021. During 9 months FY22, revenue from operations was 3,351 million versus 1,917 million. That is a growth of 75% on YOY basis. Ebitda was 948 million versus 446 million in 9 months and FY21. That is a growth of 113% on YOY basis. Net profit was 784 million versus 311 million in 9 months FY21. That is a growth of 152 million on YOY basis. Ebitda margin was 28% versus 23% corresponding previous 9 months. PAT margin was 23% versus 16% in 9 months FY21. During Q3 FY21, revenue from operation was 1047 million versus 801 million in Q3 FY21, growth of 31%. Ebitda is at 285 million versus 252 million in Q3 FY21, that is growth of 13%. Ebitda margin is at 27% versus 31% in Q3 FY21. PAT is at 228 million versus 209 million in Q3 FY21. That is growth of around 9%. PAT margin is at 22% versus 26% in Q3 FY21. SDA contributed around 51%, PTC contributed around 24%, and PSC and others contributed around 22%, and Electrolyte salt contributed around 2%. During the quarter, our export contributed around 80% of our total revenue. But due to ongoing increase in the logistic cost, that has impacted to most of the industry. There was a 2% increase in the expense, shipping expense as a percentage of sales, and 1.2% in power cost as a percentage of sales during the quarter. Out of our net IPO proceeds around 2072 million, 511 million has been spent, and rest is lying in with the monitoring agency. That concludes the update on financial. We are now open the floor for question and answers.
Should we open for Q&A, sir?
Please, yeah.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sudarshan Padmanabhan from JM Financial. Please go ahead.
Yeah, thank you for taking my question. So my question is...
Sir, if you can speak... so sorry to interrupt. If you can speak closer to the answer, please.
Yeah, can you hear me now?
Yeah, this is better.
Yeah. So my question is trying to understand, the cost, absolute cost escalation below the gross margin. So if I look at, I'm just comparing the first quarter and the third quarter here because the top line is similar. But your cost as far as employee cost as well as the other costs are significantly higher. A little clarification here whether this, large part of the cost is primarily because of transportation and other costs, the power cost, or is there an element where we might have produced a little bit more and because of Omicron, the customer might have not taken it off from us and that shipment could have been delayed to the fourth quarter, and that is impacting in, the kind of lower sales, reflecting in terms of the numbers.
Okay. So as far as other expenses are concerned, so there is an increase in power and fuel cost around 2.5% as a percentage of sales. Freight has increased by 2.2%. And ETP and other costs is contributed around 2% as a percentage of sales. And due to in employee cost, there is increase towards the provision we made gratuity, and we inducted two position at senior level. One is myself, and other we appointed CTO also to take the company on newer heights. So whatever your concern may be having, but that is not the case. It is genuinely due to the increase in the cost which we had just mentioned now. And you will also appreciate there is a time lag in passing on the cost to the customer. So there is a time lag which is ongoing process.
Also, Padmanabhanji, this is Chintan. Typically, the goods in transit from Tatva India to its subsidiary, Tatva Europe and Tatva US, would usually would remain in a range of about 10 to 11 crores on quarter-end basis. Whereas because of higher demand outlook for the next quarter, so there are goods in transit worth 15 crores. So what you potentially estimated is, yes, the production has been made and it is in transit, which is not reflecting in actual sales. So that is an increase of about 5 crores, which is goods in transit to the subsidiaries.
Yes, sir. And sir, coming to this COVID, you did mention that there is the expansion is on progress. So we are on schedule to start the capacity on the third quarter of FY23. Is that right?
Right, November of 22. That is, we are still on target with that.
Okay. And sure. And sir, with respect to the 2 new contracts on the SDA side, when can we start seeing visible contribution? Should it be probably from the first or the second quarter of the coming year?
Yeah, so by mid of first quarter is when we anticipate. By May is when the customers are anticipating again the demands to go back to full swing. So the fourth quarter, this current quarter, the fourth quarter, we will see almost similar kind of demands what we have seen in Q1 and Q3. And beginning of Q1, somewhere in mid of Q1 next year, we will see again a steady rise in demands for STAs.
Sure, sir.
The demand is definitely strong, so they have queued up the orders. But right now, just because the further downstream industry is not consuming the products as of now, purely because of semiconductor shortage, which is causing the whole supply chain on a slowdown mode.
Sure, sir. I'll join back with you. Thanks a lot.
Thank you. The next question is from the line of Sanjay Jain from ICICI Securities. Please go ahead.
Good afternoon, sir, and thanks for taking my call. A couple of questions. First, a bookkeeping question. Can you just give us this quarter's revenue for all the 4 segments? That would be helpful.
Sure.
So in this quarter, you want to know the breakup of the products, which contributed to sales?
Yeah. For PTC, SDA, PAS, and Electrolytes.
Out of 4016 million sale, SDA contributed 533, PTC contributed for 247 million, Electrolyte salt contributed 22 million, and PHC contributed 234 million. Rest is from other operating segment. So SDA contributed in terms of percentage, SDA contributed 51%, PTC 24%, PHC contributed 22%, Electrolyte salt contributed 2%, rest from other operating income.
Got it. My second question is on margin. There is a bit of product mix deterioration from last quarter. While our gross profit margins have gone up again 130 basis point, while the mix has been slightly inferior with SDA contribution coming down to 51% from last quarter of 62%. Now, what is leading to the margin expansion despite there is unfavorable product mix?
Yeah, so basically, Sanjay ji, I would not say it is just purely because of absorption of increased cost that is going into the customers. They are willing to absorb that additional cost that has saved us from margin erosion. And also, even within each individual product segment, these are all large basket of products. So sale of a specific product increase, marginally can also lead to a little better revenue realization. So that is what is impacting this 0.5%, 1% margin here on there, is purely because of that individual mix changes within the portfolio. But the real change from Q2 to Q3 in terms of margin is purely because of changes in the SDA sales going down from 61% to 51% is what is causing this change in real change in the margins.
No, it has come down while margin has gone up. So margin has clearly been on a reverse trajectory, right? the SDA has come down from 62% to 51%, and we anticipated that leads to some amount of margin erosion. Instead of margin erosion, there has been a margin expansion. So the shift looks quite big. One, it should have fallen while it has increased. So if I add both, we are at least 300-400 basis point of margin expansion. And just trying to understand whether PTC has a better product mix or electrolyte salt has a much higher margin and that is adding to it. What is adding to this additional margin expansion?
There are two specific products. So one is under the PTC and one is in the PASC segment. So these two particular products we have sold in much larger volumes in this particular quarter. So these two have much better margin realizations, almost similar to kind of SDA margins, so which is causing this change to happen. That is what I said, that within a particular segment also there are certain products which enjoy better margins. So one is an agrochemical intermediate within the PASC segment, which is giving this impact, and another is in the quaternary compound and in the PTC segment, which is again into the US market, which is having much larger market expansion is happening for that product, which is also leading to a better margin realization.
Got it. Great. Second, on the electrolyte salt, it's a phenomenal jump. I don't think we were anticipating such a sharp jump in the electrolyte salt. Can you just give some color? How is the market looking like? Whether this increased level we can still add to the revenue going forward? How does the demand outlook and the product outlook looks for the electrolyte salt?
So for Q4, we have similar kind of orders already punched in, like the Q3.
Okay.
And for the April to June quarter, there is a slightly higher forecast coming in from the customer. So this is slowly expanding. So the volume is increasing quite steadily. That is what we are also observing. But I don't have a full year forecast from the customer yet. But the indications that has gone from Q3 going to Q4 and then followed up by Q1, it is a clear indication that this is on the rise. It's a slow rise, but that is definitely happening now. That is what I can see. Also, we had supplied 2 new electrolyte salts to a different customer. Now, this has been commercially approved by them, and we are expecting a commercial order to begin from them in this current quarter. So this still I don't have a very confirmed feedback from the customer, but this is an indication that we will ship something to them in this current quarter. So that is a new beginning of a different electrolyte salt that is getting into commercialization now. So yes, the applications of super capacitors is slowly and steadily actually happening now, and we will see this kind of growth happening slowly and steadily.
And where is this supercapacitor batteries going? Are it going into the electric vehicle or more into the renewable energy side? If you can help us with that.
So it is primarily into, so this new application where we are expecting commercialization now to happen is in the storage area, so renewable energy storage space. And the existing application where we are selling is into a mix of applications, but primarily more into the EV application. So it is going as a combination with the lithium battery to support the life of the lithium battery and also to give additional power, boost the power of the EV vehicle. So that is the kind of application where now this is being used commercially.
Well, is it getting popular? Because I think adding to the lithium life is a great application. Are we seeing this kind of product demand coming up from the other customer also?
No, so we are still talking. So basically, it is still in a verbal mode right now. So only exchanges of communications and quotations has happened. Still sampling is not happened. But this is another East Asian customer who is looking for a similar application of using super caps into EV in conjunction with the lithium battery. So see, basically what happens is when you have super cap battery and when you want to accelerate your EV vehicle, so the moment you press the accelerator, there is a larger demand of power that comes out. So this instantaneous power requirement is fed by the supercapacitor battery. So this is what leads to saving of your lithium battery and enhancing its life cycle within a single charge. So that is how this is being applied as a hybrid system with lithium batteries. So this is the kind of new application that is coming up in this area.
Got it. On the SDA side, now with the acquisition of two large customers, are we pretty much dominant now globally for all the major suppliers? Do we cover everybody now?
No, one of the largest customer is where we are still, so most of the 6, now we have 7 customers on board, but one of the largest customer is still where we are into the approval phase yet. So that we expect that commercial should happen within this 2022. Then I can claim that yes, we are there almost with all the key customers there.
Okay. And these additions of new customer will help us filling this new capacity which is coming up. That's the right understanding, or we are still have to go to the multiple model which are getting released and it may take time to ramp up this customer? How should we see that?
It's basically enhancing the demand for the same segment, so because you are widening your presence within customers, so your existing product portfolio is going to see an enhanced revenue coming in. So this will help us fulfill our enhanced capacities will get filled up with this customers induction on board.
Got it. Last bit of question from my side. On the R&D side, it looks like on the continuous flow chemistry, we are ramping up faster than what we have spoken in the last quarter, right? We were talking of 2 to 3 years kind of a view for commercialization of agrochemical intermediate, and now we are bringing it down to 12 to 18 months. So what has changed in last 12 months, and are you seeing a much superior success at your R&D pilot stage, or customer demand is so robust that even they are doing the process faster than the normal rate? So what is driving such a phenomenal acceptance of the product on the intermediate side?
See, basically, this is kind of a lucky breakthrough that we got with these new 3 products, the versatile catalyst we got into. So we were trying to synthesize a catalyst for some other application and accidentally ended up synthesizing the catalyst which successfully ran on these 3 products. The same catalyst is showing such kind of a versatility. So I think it's a kind of a lucky break that we got here. But yes, we have enhanced our strength in terms of technical capabilities. So now, originally we had 2 equipments where we could only run the continuous flow chemistry synthesis in our lab. Now we have expanded them to 4. And also our PhD strength, which began with 1 PhD chemist in our lab last year, is now enhanced to 5 people on PhD levels working in our lab. So yes, we are also focusing very clearly on this, because this has its own advantages which I have continuously talked on all the calls. So this is giving us little higher speed in terms of development and synthesis. And with the kind of experience that is now building up, so that our confidence level is also slowly and steadily rising, that this is doable and we can do multiple things using this kind of chemistry.
And where is this versatile product getting into? Is it an agrochemical, pharma, or some other application?
So one is going to be a key raw material for our electrolyte salts itself. And also it has applications into the next, if we go into the next stage of chemistry, it becomes a very important pharmaceutical intermediate as well. And the another product is having applications into inks industry.
Okay.
Yeah. And the
third one is
product which is being used as a solvent for coating of your metals on the electrodes of the lithium battery. So this is, I'm sure this is going to take a very long time for us to commercialize, because the entry barriers are too strong. But with kind of announcements about lithium batteries being sought to be manufactured in India, I think being made in India product might have some advantage in this area. So there's no other Indian player in this particular chemistry right now.
I think great commentary overall. Thanks, Chintan bhai, for taking my question. I got few more, but I will get back in the queue. And best of luck for the coming quarters.
Thank you, sir. Thank you.
Thank you. Before we take the next question, a reminder to the participants, anyone who wishes to ask a question may press star and one at this time. The next question is from the line of Nakshita Mehta from Credent AMC. Please go ahead.
Hello. Thank you for taking my questions, and congratulations on good year-on-year and 9-month numbers. So I wanted to ask the quarter revenue that has taken a hit. So you mentioned that it is major part of is from SDA. So can we attribute all of it to SDA, or how does the demand look for product as well?
So I think the shift that has happened in terms of quarter-on-quarter basis is purely attributable to the SDA, is what generally would be a true statement. And as I already said, what is attributing to this shift in SDA demand is because of the shortage in semiconductor chips which is prevailing globally.
Right. So you mentioned that it is also true for this quarter, the quarter 4. Can we expect similar hit? I mean, because since SDA is the major contributor of your revenue, how do we see the top line for next quarter?
Almost similar or maybe slightly better, but within the same range.
All right. Thank you. This was my only question. Other questions were previously taken. So, yeah, thank you.
Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and one at this time. The next question is from the line of Isha Agarwal from VT Capital. Please go ahead.
Hello.
Yes, ma'am.
Yeah. Hi. So, I had a question. I just wanted to...
Ma'am, sorry to interrupt. Your audio is not clearly audible. If you can speak closer to the handset, please.
Yeah, hello. Yeah, I had a question regarding, I just wanted to understand your market share globally in all the products that you have, and what is the competition that we face from China?
So I've talked on phase transfer catalyst also in the past. So this is where there are multiple players globally, including Chinese players. But we are definitely enjoying a leadership position here with about 30% share in the industry. And we have one unique proposition where we have the largest portfolio of phase transfer catalyst among all the known players. In terms of SDAs, we are the second largest player globally. In terms of electrolyte salts, there are 3 known commercial players globally. We are one of them, and we are the only player in India. And I'm not sure of what percentage of market share we might be actually having here, but I'm assuming we are close to about 25% of the market share. And in PAC, it is basically a portfolio of a large number of products, which is primarily going from individual customer to customer basis kind of a portfolio. So there, most of the cases where we have this PAC segment is evolved because of India being as a preferred second supplier to the existing Chinese source. So I would say in each of these cases, we might be enjoying about 25 to 30% of the customers' demand, second to the Chinese core supplier.
Oh, thank you so much, sir. And also, I had just another question. So basically, like down the line, when we know that the electrolyte segment is going to play, it will take another 2 to 3 years and the demand actually starts to come in. So can you help me with the projection of the revenue contribution that time that we can have from each segment? If we project it like from FY23 or 24, how will be the revenue contribution?
So you are talking in terms of mix of products?
Yes, sir. Like as of now, if we see that the electrolyte is contributing to around 1 or 2%, so if we take after 2 to 3 years, what will be the revenue contribution that we can expect from all the 4 segments? Like just a rough idea, if you can give us.
On a broader sense, if you say,
yes.
I would rather pick not 3 years, but I would say let us talk in terms of 4 years of breakup. Then I would see the PASC segment contributing about 35% of revenue. The SDA segment would continue to contribute about 50 to 55% of revenue. The phase transfer catalyst segment should contribute about 10 to 15% of revenue, and at that point in time, the electrolyte salt segment must be contributing about 5 to 7% of revenue. So this is we are talking in terms of on enhanced revenue basis. Huh?
Okay. Thank you so much, sir.
Yeah.
Thank you. The next question is from the line of Gaurav Chopra from Union EMC. Please go ahead.
Hi, sir. Just two questions from my side. On the SDAs for zeolite, sir, you mentioned that the decline was on account of slowdown in the automobile segment. So can you sort of give us the breakup between how much of use cases into automobiles and non-automobiles, and are we seeing incremental use case coming in the non-automobile segment for this product?
So currently, I would say a 80-20 mix of auto and non-auto segment is a part of our business. And yes, in terms of increasing revenue share coming from the other segment, that is happening. But of course, this is not going to be a huge jump all of a sudden, because the application which is involved into the NOx emission. So this is not only, I would not say this is only automotive application that will continue to grow, but this is basically the NOx emission control application which is growing. So this is growing into multiple areas. It is getting into auto, industrial chimneys. It is also getting into DG sets emissions. It is getting into marine vehicles emissions. So wherever we are using fossil fuels, this is where you will need a NOx control system. So these all applications are growing. So I would say the demand, I would rather put a breakup as 80% in NOx control and 20% in other areas of usage. And the other areas of usage are also growing, but would be a slow growth because these areas would not involve a huge amount of catalyst requirement. So for example, let us say if we are running a continuous flow chemistry, so we are doing a lot of continuous flow chemistry here. So once you have this catalyst, it can run for 6 months or maybe even a year. The same catalyst you keep on continuously regenerating and reusing in your process. So that is how it works. Whereas in auto emissions, just purely because of the volume, the global volume that is required for NOx control, that is what is pushing the demand so sharply.
Got it. Secondly, so you had, I think one of your earlier presentation, you had mentioned about this product lines which gets used in lithium-ion batteries. So any update on that? And apart from that, can you sort of give us 2-3 products which you believe that would become larger in the overall scheme of things apart from SDAs?
So for this battery application, now we have sampled our product to a East Asian customer. So we still don't have any preliminary feedback on that. So, but that process has begun, and on continuous flow basis. So that is our first R&D success, and now it is into final stages of review of pilot equipment. So once that design is reviewed and accepted, then I think we should be piloting this product in next 3 months time frame.
And what can be the market size of this product based on the demand for the lithium-ion batteries in India or wherever the target customer is?
So as far as I understand, the overall demand for this product could be in the range of about 15,000 tons, putting pharma application as well as the lithium battery applications put together.
Okay.
And this is growing. So basically, as the lithium battery propagates within the industry, so this demand is expected to grow. But this is not the only solvent, just to give you a correct idea of what it is. So this is not the only solvent which is used in lithium batteries. There are typically 4 different solvents which are primarily used in lithium batteries. So one is dimethyl carbonate, diethyl carbonate, propylene carbonate, and this monocline. So depending on the geography, depending on the application, depending on what temperature range this EV battery has to operate. So based on all those criteria, they choose which is the correct solvent for that particular application. So there are 4 key solvents alternatively being used in the lithium battery, and largest of them is PMC.
Got it. So lastly, any new products which have been commercialized which can have potentially large market opportunity for us?
Yes.
No, I mean, is there any other product apart from what you've just talked about?
So I just talked about one good agro intermediate that we have now successfully completed and submitted a commercial sample. So we took a plant scale batch and have submitted the samples to the customer. So this we have met with their all stringent quality requirements about 99.9% purity and all those stuff like that. Also meeting with their very critical demand on terms of price, to make their whole project commercially viable. So that is also we have met with their price idea. So we have been working on this product since last 2.5 years, which is now we are satisfied with what we have done and submitted a commercial sample on that. But I expect the commercialization to happen in next 12 to 18 months. So there are a lot of stuff that still needs to be done at customer end in terms of submitting their official documents for registering the product and stuff like that, where they will include us as their key raw material supplier. So I believe it's still a time frame of 12 to 18 months.
Got it. Thanks for answering my questions.
Thank you.
Thank you. Before we take the next question, a reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Krishan Parwani from JM Financial. Please go ahead.
Yeah, hi sir. Thank you for the opportunity. So my first question is on the capacity utilization. So what was the capacity utilization during the quarter, and how much more can we grow from the current capacities?
So there are, basically two different, if you see our plant, there are two different stuff. One is your plant which has conventional reactors and stuff like that. And you have another segment of your plant where you have assemblies, where you manufacture your SDAs. So in terms of SDAs, we are right now utilizing somewhere close to about 60% of capacity in terms of this current quarter. And in terms of the other part of the plant being utilized, nearly about 90% of the capacities.
Okay, so so can we say that the last quarter's revenue probably we can grow more 5-10% on the last quarter's revenue until the new capacities come up?
Absolutely, yeah.
Okay.
So that is what we saw in Q2. Is probably we are running at optimum levels, So that is what it is.
Okay.
Until the new capacity is coming, yeah.
Understood, sir. And sir, I just missed out on the details of new customer additions of SDAs, but I think which you were mentioning that the supply is scheduled to begin from December 22. Can you please,
Not December 22. It will begin in 22 itself. So one of the customers, we are expected to receive a formal order within next few days, and delivery scheduling starting from April of 22. And another customer, we already have a small commercial order, which is right now being executed, which is being produced right now at the plant.
Understood.
But this is going to be a slow starter because this is their first experience with Tatva, where we are getting introduced into their supply chain. So we don't expect very large volume of business to happen. So this is going to be a slow start and a gradual growth business opportunity with both these large customers.
Understood, sir. Understood. And this agro opportunity and the electrolyte salts opportunity, when are they likely to be commercialized?
So electrolyte salt opportunity is one customer is already on the rise, so that is what is pushing the revenues in that segment. And the second customer, which has commercially approved, is also expected to start sending their orders within next few days or next couple of weeks is when we expect to start getting their commercial orders.
Understood.
It has to be commercialized in a very short span of time.
Understood. So just one final clarification. So on this SDA front, the new customer addition, large volume jump ideally should be from the newer capacities, right?
Right. Absolutely.
Okay.
And that newer capacity was designed increase in SDA setup was designed particularly keeping in mind 3 new customers. Out of those 3, 2 have been cracked, and now still we are waiting for 1 more customer to be cracked here.
Understood. So I think so. Can we say that you have kind of almost acquired major customers buying the SDAs for Zeolite, or are there any more to go? I mean, the major ones.
So there are more. There are 2, 3 more to go, but these are most of the key and most important customers is where now we have our presence.
So the market share gains, should accelerate, I think, in that case, correct?
Right.
Okay. Yeah. Thank you, sir. That was very.
It is just a matter of a year or so to prove your consistency in terms of supplyability, in terms of quality. And once that confidence level starts to build up, that is when you start to see your volumes to grow.
Understood, sir. That is very, very helpful, sir. I think that's it from my side, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Anurag Patil from Roha Asset Managers. Please go ahead.
Thank you for the opportunity. Sir, for this Dahej facility, what would be typical asset turns?
Sorry, can you please repeat the question?
What would be the asset turns for a Dahej facility, revenue potential?
Typically, I would say 3 revenue potential asset revenue ratio would be in a range of about 3.
And sir, what would be our target to utilize fully for this capacity? 3 years, can we say?
That is what we are expecting. So, and that is purely the reason why we have ended up buying a new plot in a different industrial zone in Dahej, because we anticipate that we should super saturate these enhanced capacities as well in next 3 to 4 years of time frame. So that is what has pushed, because once you buy this land today, you need about a year and a half to get the environmental clearance, and then you can start building up a new plant. So you have to act at least 3 years in advance. So that is what we have done right now.
Okay, sir. That's it from my side. Thank you very much.
Thank you. The next question is from the line of Manish Jain from Moneylife Advisory Services. Please go ahead.
For the opportunity. You had earlier mentioned Ebitda margins to be in the range of 24% to 27%. Do you expect this Ebitda margin range?
Mr. Jain?
Yeah.
So sorry to interrupt. Your audio is not clearly audible, sir. If you can speak closer to the answer.
Can you hear me now?
Yes, sir. Please proceed, sir. Mr. Jain?
Hello?
Yes, sir. Please proceed.
Hello, can you hear me now?
Yes, sir. We can hear you. Please proceed.
So I was asking that you had earlier mentioned Ebitda margins to be in the range of 24% to 27%. So do you expect this the margin range to be maintained in the quarters going forward? And can you update about the order visibility for the next 6 months?
Right. So if our conviction would not have been so strong, I think this was the most challenging quarter that we have gone through, in terms of all adversities. If you see the freight cost, that has technically against $100 export, which typically was a $4 freight cost, has gone up to almost $6. So again, certain raw material costs have gone off the roof. Some prices, some of the key raw materials where we have seen unprecedented more than 100% rise in terms of raw material prices. But despite of that, having said this, I am really thankful to all the major customers where we have larger volumes of business for their understanding and absorbing quite quickly. So there may be a lag of about 3 to 4 weeks time frame, but that within that time frame to get them convinced and to ensure that the costs are being passed on, that was a wonderful thing. So I am really thankful to all those customers as well. So we have demonstrated that despite of such adverse scenario, also the SDAs, since the SDA is our largest gross margin product range, right? So despite of that being about a 50% revenue, 51% revenue in overall product mix, despite of that, we could barely manage, with a decent Ebitda margins. So I think maintaining this margin should not be a challenge over next few quarters. Again, I foresee, the current quarter is also a big challenge in this continuing fashion in terms of raw material pricing and availability. So disruptions in terms of supply chain, which would eventually lead to certain rampant price increases, is what I personally foresee in some of the products. So we have geared up ourselves, to ensure that we have enough safety stock which can run us through this quarter for the key products, so that the price impact doesn't bother the customer on a frequent basis. So we are doing all necessary steps required to ensure that customer also remains in a happy mode. We are able to continuously supply and also maintain the margins at decent levels. So yes, I think in short, we are confident we should remain in this margin range over the next quarters.
Can you update about
visibility? As I said, the business is on all fronts in terms of demand. Talking to each customer, the demand potential is very strong. But as we are struggling, so let us say the semiconductor chip is slowing down the business on SDA. So the whole supply chain is suffering because of that. Similarly, let us say if some of the customers are struggling with their key raw materials, that will also have some impact on us. But said that, this might be some temporary speed breakers. But overall, generally speaking, the market outlook or the demand perspective is really super strong.
Okay. Secondly, on the new opportunities, in the previous con call, you had mentioned about 4 large opportunities in the pharma and agro intermediate segment regarding flow chemistry. So what has been the update on these opportunities?
So one of these opportunity, now we have concluded our R&D. We have completed the commercial piloting, the commercial plant trial, and have submitted a commercial sample to the customer. So that is what I'm talking about, next 12 to 18 months of commercialization to happen. And working on the second opportunity is where we hit luckily on a different catalyst, which has pushed us into 3 new products, which was not on the cards at all. So that is a different set of opportunity we are looking at. But we continue to work on 3 other products. One of them is going into quite a positive mode. With 2 products, we are still in a struggling phase. We are still in a primitive development phase. That's still not a big crack open. The technology is still seeming quite difficult to crack, but we are working on that. So the second product is also we have a very good breakthrough in synthesizing the right product. Now we have to optimize the yields and the process parameters. That is where we are working on.
Okay. Thank you and all the best.
We are in line with what we are seeing that in next 2 to 3 years is when we want all this to go into commercialization. I think we are pretty much well in line with what we are envisaging.
Okay, that's it from my side. Thank you and all the best.
Thank you, sir.
Thank you. The next question is from the line of Jason Soans from Ashika Group. Please go ahead.
Hello, sir. Thank you for taking my question. My one question from me was, obviously this SDAs and you are the number 2 player in the world for zeolites. So just wanted to understand, so a certain portion of these SDAs must be going for the synthesis of zeolites, and which goes into basically a catalytic converter. Now I just wanted to understand, so our offtake will completely dependent on new demand for commercial vehicles, or is there also some scope for replacement demand? Now, replacement demand could probably, what I would understand is only when you replace the catalytic converter or something, probably then you will have replacement demand of something of that sort. So could you just help me some color on this in terms of, is there some scope for us for replacement demand, not only in terms of auto, but also in terms of the other applications, which is non-auto emissive applications?
Typically, when you say, European, American countries, a vehicle lifespan of 10 years, And all the premium car makers are offering their catalytic converter coming with a guarantee of 10 years. So typically, ideally speaking, if the vehicles are operated under ideal conditions, then typically there should not be an opportunity in terms of recurring demand from the same vehicle. So your business grows as the applications increases, the number of vehicles being sold increases. All different areas of applications of NOx control are taken into consideration. For example, heavy duty earth moving equipment, marine vehicles, industrial chimneys. So all these segments are still yet to begin commercialization kind of areas is this. So when this kind of applications set into those areas, that is again going to push the demands for the NOx emission control devices, which also will push the demands for it further.
Sure. So mostly it will depend on new vehicle demand for commercial vehicles and increasing usage.
I would say 99% depends on the new vehicle demand.
Yeah. New vehicle demand, yes. And more increase of usage of non-auto MSA applications. Okay. And just wanted to know on this electrolyte salts opportunities for your supercapacity batteries. Now I just wanted to know, it's a small portion of your segment right now. Now, I just wanted to know, in terms of supercapacitor batteries, where else can... so one is this EVs, where the supercapacitors will work in conjunction or in coordination with lithium batteries. And plus, I think renewable energy also is an option. Now, these are two big growth drivers for you. Are there any other applications? How do you see the supercapacitor battery industry growing for you? I mean, how do you see the growth prospect for it? Because right now it seems to be a small area for you. So just wanted to gauge the potential of how big this can be. Yeah.
So if you consider, the renewable energy storage system, so it is your solar energy plants, your windmill energy plants, is all who needs to store the energy to put it into the grid. Eventually you will need a system where today what we are doing in India is we are generating the power and putting it directly into the grid. So now there will be a day when you cannot, because this will disturb the grid. Once your solar energy generation or windmill energy generation crosses a threshold, then you cannot put power directly into the grid, otherwise it will disturb the grid. So then eventually you will need systems which will have to store this generated energy and then put it into the grid in a systematic way. So this is the kind of potential. Honestly speaking, I don't have the numbers where this can grow, but if you can just imagine the potential where all the solar energy or the renewable energy storage systems would be required, and I think this could be a mind-boggling number.
Okay, so the storage of renewable energy will require supercapacity batteries in a large number, and hence
right.
that will consequently positively impact demand for electrolyte salts as well. Okay.
Right.
Okay. Any other application you see where this can grow? I mean, apart from this?
So even there is another commercial large application is in stabilizing your electric grids. So your grids, typically, at times you get high voltage spikes and stuff like that. So this needs to be kind of, line conditioning basically, So you have to condition the line, stabilize the line in terms of, having uniform power within the grid. So this is where also you need supercapacitors to absorb those spike of power that travels through this grid. So this is another area of application where supercapacitors have now started to be used on commercial scale. Grid stabilization, basically.
Sure. Okay. And so just one last question I would want to as from a strategy point of view, you did speak about the agrochemical intermediate which you're looking to commercialize in the next 12 to 18 months. And you did allude also to a high level of purity, which also is in coordination with the SDA strategy as well. So are we looking from a strategic point of view, to move towards such products which will have very high entry barriers and consequently give us better margins and better ROCs?
We have two typical criteria whether to take up a project or not. So one is whether we can make it environmentally sustainable by using some alternate technology. let it be electrodialysis or a continuous flow technology where your effluent generation is minimized. And second criteria is because of using or synthesizing this kind of catalyst, it automatically creates, a space for you where your products are getting into a very high purity. So it creates an entry barrier even for the conventional chemistry guys to enter into that area, because achieving those kind of purity levels automatically become difficult using conventional chemistry. So this is the key criteria where we see if there is a potential to have any kind of positive environmental impact and whether we can use some alternate technology to make this product. These are the two criteria which predominantly we think of before accepting a project. We are not entering into any simple chemical synthetic projects as of now.
Okay, sure. And so just one last question from my side. We did, sorry to come back to the supercapacitor thing. So the supercapacitor batteries, are they being currently used as well in the EVs, or is there lot more scope for supercapacitor to grow with the EVs?
Just recently they have been started to put to use as a hybrid system in the EV vehicles.
Okay.
Right? And I forgot to mention there is another large commercial application for this supercap battery is already in our existing cars where you have this start-stop function. So this is which is supported by a supercapacitor battery in our existing cars. So this is another commercial application where supercap batteries are already being used.
The start-stop function in cars. Okay.
So earlier it started with only high-end cars. Now it is coming into variety of segments of cars, SUVs. So now a lot of new models being launched is having this kind of a start-stop function. This is purely an environmental application that is being introduced. So this can minimize or reduce your fuel consumption and also minimize emissions. Carbon footprint can be regulated. So this is purely an environmental application which is being put to use in the passenger cars. So this can also grow, eventually can move into commercial vehicle space also.
Sure, sir. So thanks. That was all from my side.
Thank you.
Thank you. The next question is from the line of Sabyasachi Mukherjee from Centrum PMS. Please go ahead.
Yeah, hi. Thanks for the opportunity. So two questions from my side. So firstly, coming to this NOx emission control, is there globally any other technology that is being currently under use other than this zeolite-based technology that you are into?
Power plants use a different technology for NOx control, but this allows you to have emissions in higher levels of NOx. When you talk of automotive emission or industrial emissions, now we are talking of NOx emissions below 5 ppm levels. So this, as of now, there is no other commercial technology which can deliver this kind of NOx control. So this is the only prevalent commercial technology as of now. So this is called SCR. Selective Catalytic Reduction Technology.
Okay. And a follow-up to that is just to understand the value chain of your customers and how is that. So basically, you supply SDAs to you mentioned top 7 customers, top 7 players, and still one more large player is yet to get onboarded. We expect that too also. So how the value chain happens? Do they supply to the automobile OEMs or how is that the entire value chain?
So the first value chain is, we are the first step in that value chain. So we are at the most primitive level where we make the SDAs. Using these SDAs, my direct customer manufactures the zeolite. Then this zeolite is converted by other set of customers. So their customers, of my customers' customers, they convert these zeolites into catalyst. Now this catalyst can either be a refining catalyst, a continuous flow chemistry catalyst, or it can be an automotive NOx control catalyst. So then they supply our chemical chain ends at this catalyst manufacturing, right? And then let us say if you talk of automotive, then this goes to an OEM who fabricates the catalytic converter. It's a mechanical device. So, and then this catalytic converter becomes a part of your car.
Okay. Understood. Second question, I see, our exports contribution has been on the higher side, probably 75 to 80%, historically. Where do you see this number, probably in 3 to 4 years, on an expanded capacity basis?
Sir, if we see basically our Ankleshwar facility is on super saturation level. Okay, so whatever growth we are seeing over last 2 years and continue to see this growth over next few years will happen only from our Dahej facility. And our Dahej facility is located in a special economic zone. So from there we are typically only focusing on export sales. So the next future potential growth, whatever we are looking into, is predominantly looking at export growth.
Okay. Just a follow-up to that. So, considering the EV potential and EV adoption in India, and government PLI schemes in advanced chemistry cell and battery manufacturing and all those things. So where and we also have seen few players announcing capacity for electrolyte salts and solvents and many more in the ecosystem. So where do you see the domestic sales in terms of electrolyte salts and how the competition would affect us? Will our first mover advantage in terms of we already have a solution in place, will that be in favor of us? So your thoughts into that.
So eventually, yes, we will see, but it will still take a couple of years at least, where you will see a real commercial producer. We are right now only talking of assembling these batteries and stuff like that in India. When you talk of real production of lithium batteries, still there is no one in India, honestly speaking. So that will still take a few years when you will see a first commercial actual producer of lithium battery happening in India. Same is the case with supercapacitors. So there are announcements that have been made, but most of these are in place, in terms of assembling the systems rather than actually producing the system. So still, our particular products would still continue to see demand only getting into exports. It may be 2-3 years down the line when we will see this kind of demand setting up in the Indian market as well. Still, it is probably 2 to 3 years away.
Got it. Understood.
And considering that the Indian chemical industry and the segments where we are very predominantly active, and we are also so optimistic about our industrial growth, so I am sure most of the whole chemical industrial segment in India is set to grow in next few years. So considering that, the next land which we bought recently, that we have bought outside of the SEZ. It is not in an SEZ, it's in a domestic tariff area. So that is, keeping in focus that beyond 3 years, we will also need a plant which can grow with the industrial chemical demand in India itself. So that is why we have procured this piece of land, which is not in an SEZ, which is outside an SEZ.
Okay, so focus predominantly from that land would be to cater to domestic demand. Is that a fair assumption? Okay.
Absolutely.
Okay, thank you, sir. Thank you. Thanks a lot. That's all from my side.
Thank you. The next question is from the line of Alisha Mahawala from Envision Capital. Please go ahead.
Hi, sir. Good evening, and thank you for taking my question. Well, most of my questions have been answered. Just wanted to understand on the margin front, as you said, that a 24-25% kind of number sustainable.
Sorry, ma'am. Ma'am, can you please repeat that question? Sorry.
Am I audible now?
Yes, better.
Okay. Hi. I was just asking with respect to your EBITDA margins, as you were mentioning earlier in the call that a 24%-25% kind of number is more sustainable. But with the H facility coming on stream and like you said, with newer client onboarding for electrolyte salts and the growth expected in PAFC, are we expecting, say, in a 3 to 5 year period, these margins to maybe shift upwards, or is this a more sustainable basis? Just wanted to get some color on that.
See, with continuous flow chemistry product getting into commercialization, there are definite chances for this margins to get into an upward movement. But still, I would say, a fair estimate is any industrial product which goes into a larger volume would only sustain commercialization if their margins are on realistic levels. So the customer also understands what he is buying and what could be a potential cost to manufacture that product. So typically, I would say in realistic terms, 23-27% margin range is what would make you a commercial success. See, ultimately, we are talking of selling larger volume product into the market. Then to make it a commercial success, the margins also needs to be in a realistic zone. Yeah. So I would say that there are definitive chances that with continuous flow chemistry, certain products you will see a very steep margin rise. But generally speaking, I would say 23-27% margin is an optimum range where, and this we are talking in terms of all the product mix together. We cannot only focus on one particular segment. So we need to distribute our risk as well in terms of product portfolio or on customer spread. So considering this, I would say 23-27% margin is a fair estimate.
That's helpful. And so just wanted to clarify, I think I missed it earlier, that the H plant is expecting it to come on stream by November of next year. Is that correct?
November of this year now. So November 22.
Okay, yeah, November of 22, and then it will take about 3 odd years to reach full potential.
Right.
Okay. And so by then, can we expect that considering the capacity we have right now and with a 3x kind of asset turn, say by 25 or 26 to be more like 1,000 crore kind of company? Is that the internal aspiration?
Yes. So that is what we aspire to do. And we are, considering that we can achieve this, that is the reason why we have gone in to procure a new piece of land. So this can keep us ready what we do next 3 or 4 years down the line.
And just one last clarification, what will be your effective tax rate? Because I believe at Dahej you are at the SEZ. So what will be the tax rate for you?
From next year, we will have only 50% waiver in terms of taxes from Dahej. So this is the last year where we are enjoying 100% exemption. So from next year up to next 5 years, or probably up to next 10 years, we will have a 50% exemption.
Okay. Thank you, sir.
Thank you.
Thank you. Ladies and gentlemen, due to time constraint, that was the last question. I now hand the conference over to the management for their closing comments. Over to you, sir.
So thank you everybody for participating in this earnings call. We hope we have answered most of your queries. If we have missed out on any of your questions, kindly reach out to our CFO, Mr. Ashok Bodkaji, or our IR advisor, Christensen, and we will get back to you offline. Wishing you everyone a very safe 2022. Goodbye.
Thank you. Ladies and gentlemen, on behalf of Dolat Capital, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.